The market made new lows this week as we got stronger than expected CPI data. Keep watching and we'll go over all the action. So let's start with the good news. Technically, we're 2 days into a new rally attempt since we haven't undercut Thursday's low, which would be our day one. However, I'd still be very cautious here, and let me tell you why. So this week was all about the CPI data, which came out on Thursday, to see whether or not the Fed's actions of raising rates has started to do its job and get inflation under control. Wednesday, we got the PPI index, which came in higher than expected, and the market didn't react too much since the CPI report is what really mattered. However, the producer price index is seen as a leading indicator to the CPI since it measures the price for the producers. So once that number came in above expectations, you could expect a high CPI report, and that's exactly what we got. The bulls need inflation to come down so the Fed can pause or at least slow its pace of rate hikes. With the CPI data coming in higher than expected in all three measures, it was a worst case scenario for the bulls. So then why did we rally on that? If you look at recent investor sentiment surveys, everyone is bearish, and just like to the upside, when price gets too far stretched from moving averages or everyone is betting on the same thing, price tends to revert back to the mean. At Thursday's open, we were nearly 8.5% below the 21-day exponential moving average on the NASDAQ. A combination of being stretched and everyone being on one side of the boat per se led to a rip-your-face-off short covering rally. So Thursday's price action was very good, and it did end positive for day one of our rally attempt. However, under the surface, we had net new lows expanding to the highest level in about 3 weeks, as you can see here from this red bar. We also had the 2-year yield make new highs, which can be seen here, as well as the 10-year, which is not what the bulls want to see. On top of that, many stocks that have been holding up okay got rejected at moving averages and sold off hard on Friday. Let's take a look at some of those breakdowns now. The first stock we're going to look at is ALB. You can see we started forming a nice cup base here. However, this week we got rejected at this 10-week moving average on heavy volume as we sold off all the way down to the 40-week and the 200-day moving average. Looking at the daily chart, you can see this cup starting to form, nice low volume, and then the selling really accelerated to the downside. Moving on, ANET, another one, we had this double bottom base, and you can see that that broke this structure this week on an increase in volume. So not what the bulls want to see. Here it is on the daily chart. Again, we had this huge spike of volume on the downside in the base. However, then we just consolidated on light volume, and then this week as we sold off, the volume came back in. Next up, MELI, similar to ANET. We had this double bottom base here. We broke the structure this week, coming down on slightly above average volume. If we move into the daily chart, you can see the same double bottom base here. We broke our structure. Today, on Friday, we rallied up. We got rejected at this 8 EMA and sold down hard to close at the lows. On semiconductor, another one that broke down from a double bottom base. Again, just breaking its structure this week. Volume picked up. Again, not what we want to see there. Again, here's that structure on the daily chart. I'm going to zoom in a little bit so you can see the volume pickup down here as the selling came in. Velocity Holdings, another one that had been holding up extremely well. This one had this nice cup base forming, and again this week we broke structure, volume above average. Not as high as last week's volume, however, you can see this ended up being a stall bar. We had massive volume there, and we closed in the lower half below the 10-week line. On the daily chart, we had the trend line. We tried to get above it, came back down, rejected, and again the volume accelerated as we came down. Okay, Wolfspeed, this one's still in its basing process. We're 4 weeks into a new base after a massive run up. However, we did get rejected at this 10-week moving average. This one was on lighter volume, so that's not terrible to see. Okay, if we move into the daily chart, you can see we pushed the new highs here. We came down, got rejected, and we tested this 10-week, 50-day moving average. First, the test looked successful as we did push back above all our moving averages with some nice volume increase. However, we just got met with selling again as we continue to base, and now we're below all our moving averages except for the 200-day. We did get rejected this morning at the 8 EMA. WillScot Mobile Mini Holdings Corp. This one was holding up extremely well. We had this nice double bottom base. We broke out last week into new highs. This week we got rejected, closed below the 10-week moving average. If we go into the daily chart, you can see here We tested this new high, consolidated, pushed above it, and then we slammed down very hard, 11%. Thursday on the CPI data, we actually got back above all the moving averages on a slight increase in volume, which was good to see. However, today sold off with the market weakness. So if the market does find its footing, this one could still have potential, but for now, it's another failed breakout. Despite many stocks in the indexes breaking down, there are still some pockets of strength. We do have some stocks that are still forming proper basing patterns that are showing relative strength. Let's take a look at some of those now. Okay, first up is AMN. This one's forming a nice cup with handle base here. We have the relative strength line at new highs. We have nice tight closes throughout the base, which is good to see. And we are above all our moving averages on the weekly chart. Okay, if we dive into the daily chart, you can see the same cup with handle pattern here. We also have this nice trend line coming down from the highs across the top of the handle. Next up is Cross Country Healthcare. This one broke out last week on a nice increase in volume. We're holding above the pivot point. We had a nice tight close this week, and our relative strength line is at new highs. So here's that same pattern on the daily chart, our cup with handle. We pushed above, came down. We haven't even tested the 21 EMA yet. This one's holding up incredibly well and should be on your radar. Moving on now, Double Verify Holdings. We're 5 weeks now into a new flat base. We did get a tight close this week, and we tested this long-term multi-touch trend line, which we bounced from, sitting right on about that 10-week moving average now. Moving on to the daily chart, you can see the same flat base structure that I highlighted here in this rectangle. And again, price sitting right on that 10-week and 50-day moving average. Volume has been low as we consolidate. So this is a good one to have on your radar, showing great relative strength. Okay, moving on to Shift 4 Payments, FOUR. This one's continuing to consolidate nicely as it forms this coil pattern. Okay, if you look at it on the daily chart, you can see price tightening. We're holding above this line and we're continuing to make higher lows. This is another one holding up well, showing relative strength, and having a rather shallow correction for how much the markets have come off. Looking now at World Wrestling Entertainment, WWE, this one broke out from its cup base this week, relative strength line at new high. Volume has been increasing as we come up this right side. This one's acting extremely well. If you go into the daily chart, you can see we pushed above that high, pulled back into about this 8 EMA, and now we pushed back above it. Relative strength here today, market's down about 3%, and this was positive on the day. Lots of volume accumulation as well. This is one we need to have our eye on. Possibly a pullback to the 21 EMA could provide a nice entry. Last up, Yelp, YELP. This one's still holding its double bottom base structure. The relative strength line's moving in the right direction. We're sitting just at about this 10-week moving average. This one's holding up, showing great relative strength. Okay, looking on the daily chart, you can see the same structure. We almost got above that 36-34 standard double bottom base pivot. However, this one just came back in with the indexes. Again, sitting on this bunch of moving averages here. If we can start pushing higher, the market can find its footing. This one's holding up extremely well. Another one to keep our eye on. So in summary, there are some pockets of strength out there, but patience is required for now until we can get a proper follow-through day and more than a handful of these stocks setting up. Thanks for watching. If you enjoyed this video or found any of the information useful, please go ahead and consider hitting that like and subscribe button below to stay up to date with all my new videos.